think there was a time when I started with Allan Gray 22 years ago when they were very similar. And I think value investing almost meant contrarian investing in those days because very few people were value investors. Now you find a lot of people are value investors. And so I think there are a lot of people that will like to buy cheap stocks or stocks that have underperformed a lot. And so you'd often find cheap stocks, but they would be very well liked. And those are often the things where I find we tend to go wrong because they are cheap, they look good on valuation, but a lot of other people also see it. And so that's often where you don't get that big bounce you get if you buy a stock that's really down and out and it's hated. It's very easy to screen for stocks that are disliked. You just look through the broker recommendation, just weighs the sells relative to buys and say, show me all the stocks where there's twice as many sells as buys. And that'll probably give you 30 or 40 stocks. And then that would be good stocks to run through the quant model, just to see, what is the quant model really like about these companies. And there's your universe. Go and analyze those. Now you'll normally find of the 40 stocks or so, there's probably 10 or 20, half, that you can very quickly discard because they'll be on the route to bankruptcy and they're almost there. Often probably are trading, probably bankrupt already. They just hasn't been announced. And so what you really look for is that one company that probably you think has an inherently good underlying business, but have just been through a torrid time. And the outlook's often very bleak, but you have good reason to believe, and you believe you can prove it to yourself that they will survive. At some course, some time in the future, things will normalize again.